So we're very, very interested in conduct, we're very, very interested in culture, and we're also very interested in risk as well, on the basis that we're investing in the future performance of companies, and therefore reports that are orientated towards risk is exactly what we are most receptive to.
I think I'll come to you in a minute, if that's all right. I just want to pursue this again with Paul a little bit more, because I can imagine most companies would be happy to say in the annual report, our people are our greatest resource. You see, they all say that, but you have no idea what it means. And quite often, the bigger the print, the least they mean it, in my experience. But see, now my question is how, although you want to see from the reports that there is this culture, there are these this conduct, this behavioural thing. How can you really get that across in a written report? I mean, what do people have to do to get the message across convincingly?
I mean, it might be, it's a very, very difficult story to tell, I quite admit on that one. When we read annual reports, we often find that the board of directors is very poor at telling that story. I don't think that it's used to talking in that type of language. So I feel as though there's a huge uplift in the quality of reports that could be achieved just by boards of directors thinking much more about how do we talk and discuss and explain and appraise leadership. What does it mean to us? What does it mean to investors, to stakeholders? So I think some of it can just come from companies. And then how is that articulated? It might be that that might not be a written narrative. It might be that that's something like a video, an interactive, where something more verbal might be of the order of the day.
But so they can talk about what they do, but that's not verifiable, is it? Is that not a problem?
Because it's outside of the annual report, the board are not signing to say that they agree, and that's a problem with the industry that we are in. About how much we put into an annual report. I mean, our preference is to see it in an annual report, but we understand that when it comes to telling the story, if it is the case that the story is very difficult to tell in a written narrative, then why not attempt it via some other means?
But so, I mean, an important point to sort of conclude from this here is that actually boards need to explain what they do in the annual report, and then a little bit of personalisation is quite helpful. Erica, would that help you? I mean, and what about your people, and I bet you've got some who work for you, analysts who really only want to get another little bit of financial data out for the spreadsheet. They don't think like this, do they? And isn't that still a problem?
We can't make a generalization. This is, when it comes to financial reports and the idea of an integrated financial report, engaging environmental, social, and governance factors right into the financial statements, we're in very early days, right? Because first you have to decide, okay, what is material? What are the real drivers of economic outcomes? So you want to start thinking by industry because they vary. And then you want to think about ultimately some standards in place for what should be disclosed, what really does matter, what are the most critical factors. But I have to tell you, I would like to add a C. We talked about culture and conduct. What we're really talking about is operationalizing corporate excellence. And the C that I would add is consciousness. Because when we talk about what questions should boards be asking, we're also talking about what questions should managements be asking and what questions should be asked all the way down to every level of an organization if we are going to see the priorities and the accountability of a corporate strategy. And so when it comes to consciousness, I mean, do our boards of directors and do our executives know that, as an example, the economic concentration that we have is unprecedented from the standpoint of what's going on in the world. The top 1,000 companies, represent about 78% of all the sales of the entire OECD. This is work according to Bob Eccles of Harvard, who talks about the culture of sustainability. That same 1,000 companies represents about 7.8 or 8% of all the jobs in the OECD. Think about that level of economic concentration. Were you aware of it, you directors and you executives? And are you aware of the level of regulatory scrutiny that's unprecedented? Are you aware of the issues surrounding climate change and resource scarcity, water scarcity? Are you aware that when it comes to the priorities of your consumers and your investors? Are you aware that over the next 30 years, we have the most massive intergenerational transfer of wealth that the world has ever seen? A very conscious $30 trillion investment base is coming to the fore. Are you aware of social media and what that means to your business? Are you aware of big data, an onslaught of information that actually is starting to become insight? Are you aware of what the NGOs are saying about you, the Deloittes and the Accentures and the PwCs who are starting to assure this data that's going to end up in financial reports? Are you aware of what the exchanges are doing, what academia is doing, what's going on in science? There's a consciousness that I think is critically important in the analysis of any company that an investor might consider buying. Do we have a conscious board of directors? Do we have a conscious suite of executives? And is that consciousness really penetrating down into the organization through metrics and measures and accountability? So are we really good at systematically asking those questions? Not as good as we should be. So that consciousness to me is another C that very much belongs in there.
Well, let me just sort of pursue, come on. I mean, this is very interesting, but and you've talked about the importance of consciousness, and it's very hard to disagree. But if you're an analyst looking at airlines, you know, at least I think you know, because I think it's true, that the only fuel which keeps an aeroplane in the air is kerosene. There is no alternative, and at some point it's going to run out, and all the airlines are going to be grounded unless something happens. You know that there are environmental issues with aviation, but your job is also to look at the relative prospects of maybe sort of Lufthansa versus IAG or whatever, and you have to do that. You can't do that on a sort of decades-long time horizon. So, you know, how are you going to get people to and to strike the right balance between the immediate needs of the analysis and the need to be to bring this consciousness factor to bear?
Well, I mean, always striking the right balance, that's always where it's at. We're talking about long-term versus short-term. There are always trade-offs. You are always going to make one investment versus another. You know, resources are finite. So probably one of the things we need to do is think harder about how we are going to incentivize different kinds of analysis and different types of behaviors. And incentive structures across the different pieces of the capital markets are beginning to change, albeit slowly. But we need them to change across, again, all pieces of the capital markets. So there's always going to be trade-offs. I think if you ease into these trade-offs, you know, companies can adapt. We can make progress. Do you invest in R&D or do you invest in some advertising and marketing right now? These trade-offs are very, very difficult every day. But the fact that, you know, Maersk executives are able to know that last year through slow steaming, and they were able to save $1.5 billion in their energy bill. That's near term, right? And that's long term.
Is that true, by the way?
Is that true?
Yeah.
How do you like that?
Okay, right, very good. And you got the message across. Well done.
We didn't agree.
But
There's a consciousness issue, and it's a trade-off, and it's timing. And
let's move on to the question which has sort of been lurking around a lot of what's been said, materiality. I'd be interested to know, starting with you, Erica, sort of how do you, in a very, very few words, what do you mean by materiality? And I'm going to ask the other panelists to chip in as well.
Okay, this is a really interesting and difficult subject because it means different things to different pieces. I will tell you that when an analyst comes into an investment review committee meeting and gives a piece of information, and by the way, there's no single piece of information based upon which any reasonable investor would make a decision. That said, is this a piece of information that potentially could contribute to a decision? Is that important? And then, of course, you know, would this move the stock? But from my standpoint, if a reasonable investor sees something that matters, that should matter, well, then it starts to become material. This is gray, and we all live in a world of gray, but does it matter to the economic outcomes?
Suzanne.
Well, I think I'd like to maybe just bridge also back to the discussion about what boards are doing. Because I think in annual reports, what investors would like to see is really to get inside the boardroom, to see how decisions are being made, what are the kinds of conversations. So, the ultimate annual report would be a video, video show from the board meetings, because that would be your testimony. But I think it has to be combined with the data and the hard facts and figures. And just to build on what Erica said, we've been reporting for many years with quite robust numbers, and we've had a long journey of raising the level of quality of our social and environmental and governance data so that they are at the same level as what we provide in the financial report. And the reason for doing it is that we put them side by side. So obviously anybody who reads the report should be able to trust the numbers on the right-hand page in the same way as they trust the numbers on the left-hand page. And that is easier said than done. But when we do it, then we are able to speak with numbers and to also demonstrate that we have the accountabilities in place and that it's quite robust. And then we experienced that actually some of the analysts are getting it because they can read the statements from our environmental performance and see what our carbon emissions are looking like. And then they can look at our financial dimensions of the performance and they can see, hey, the fact that they're saving carbon emissions is actually also helping to reduce the cost of goods sold. Actually, that is a very good business proposition. So sometimes you have to be able to put information, to piece it together and to make that intelligent analysis. And so I think that we need to have both the narrative and the numbers. And in order to have the numbers and to have them in a way that they can be used by an analyst who needs to be able to put them into their spreadsheet, they have to be standardized. And that is very, very early days. But that's where we will have to be getting if we want this to be taken seriously.
But what actually are, in your view, the most important sets of numbers you're talking about here? I mean, I'd just be interested from your perspective in your company, what's the sort of five most important sets of numbers that you're publishing, if that's not an unfair question?
This is not an unfair question, and so on the environmental side, if we start with that, because that's what I was using as the example, we report on our carbon emissions, we report on energy use and water use and on waste. So those are the sets of primary data that we have, and we have set long-term targets for carbon emissions and for water and energy, and are going to set a very long-term target for waste as well. On the social side, this is actually, and I think this is also mentioned in this report, the social data are more difficult to get at. We have a number of social indicators to report on our employees. So we have a long-term diversity target, just to mention something that resonates with the conversation we're having here. And then we've actually been working for a long time on having a meaningful target to measure what is the most essential for our business. So without going at length into the kind of business we are, Novo Nordisk is a healthcare company. We're focused in diabetes care. This is chronic disease treatment. So obviously what would be relevant is to know how many patients are we treating. So that would be an easy number to come up with, right? But the thing is, it's not that easy because we need to have proxies for that. So what we now have is actually a long-term target that is based on an estimate, and an estimate that is then relying on standardized data from WHO. So that's the best we can make. But we use that as an indicator to our own people in the business and to investors to say, this is the potential, this is how many people we're reaching. We have now set a long-term goal. We are going to double that number. That is ambitious, and you can track it, and we'll be able to report on it on an annual basis. So that's the handful.
That's very helpful. Annette, would you want to sort of give us some thoughts from your...
Yeah, I think in terms of materiality, I think I very much agree with Susanne that it's in my view, it's about impacts. It's about your negative impacts, and it's about your positive impacts as well.